So, just 2 weeks ago, I was told SoFi is complete trash, that I'm wasting my money, it's a scam, but now it's up over 25% and just running every day, it seems. And now people are asking, is it still a buy? So, what exactly changed, and how far can this run go? And will we finally clear the $10 mark and stay above it? And how do you profit big from all this? I'll answer all that today for you right after you hit that like button. If you like getting the truth without the hype, because that's exactly what you're going to get today. Despite this run, we're not going to talk about hype stuff. We're going to talk about exactly what is realistic with the stock and what's going to happen here. And more importantly, how to profit from it all. It honestly has just been a great run in a lot of the stocks that we've logged over the past couple of weeks. I mean, we have group members that have basically made an entire year's worth of salary in just these couple of weeks in regards to the runs in the stock. But that's kind of all their stocks overall. We're talking specifically about SoFi here. And yes, there's been some great money made in SoFi. But let's discuss specifically SoFi, exactly what's going on, and get you answers to those questions we just discussed. So what changed exactly? Well, honestly, nothing changed with the stock outside of the stock price moving. There's nothing fundamental, nothing that happened in regards to, an earnings beat or an earnings report at all. There's honestly basically nothing there except for the stock price moving up, which amazingly, whenever a stock price starts to run, then everybody seems to want a part of it. But when a stock is actually cratering and down, and I almost got all the way down to $6. I was kind of hoping we were going to see the $5 mark there, and then all of a sudden it just skyrockets back up. But when it's down at those lower points, way down in the sixes, like it felt like forever, but it wasn't forever. It was just about a month or so. But we were down in those price ranges. Nobody wants the stock, and now that we're approaching $8. Now people are starting wondering, should I buy it or not? That is another classic example of why retail loses all the time. We don't want to buy when the stock price is low. We only want to buy it when it's on its run. And if I'm being honest, guys, I think we have more room to run until we hit that $10 mark or so. I'm not saying we'll get all the way there. We might not. But this sort of talk, should I buy, should I not buy, is not going to lessen as we approach 10. It's going to actually intensify as we approach 10. And that right there is another reason why retail routinely buys high and sells low, because we're not interested at 6, but all of a sudden the stock starts approaching 10. It's on a major run. Now all of a sudden we're interested in the stock. So when I go to answer what changed exactly, the answer for me is honestly nothing changed except for the stock price, which of course we all know exactly. We're just basing your decisions based purely on stock price alone and not the actual fundamentals is how you get in trouble as an investor. Next up, how far can this run extend? Now look, we just talked about how I think it's going to approach that $10 mark. But in the past, we've seen routinely this stock goes on a nice run leading into earnings, a really, I won't call it a hype run, but I don't know what else to call it at that stage. Whenever you just add a couple of dollars there in a very, very short period of time, basically based on nothing, we'll have a great earnings call, which of course SoFi always for, 10, 11, 12 quarters now has always had a basically double beat and raising guidance type scenario with their earnings. It'll run up huge after earnings. The past couple of earnings ran up 20% after earnings before it just craters all the way back down into the $6, $7 range or so. But each time we have a kind of almost approached that $10 mark or gotten up over that $10 mark, depending upon which quarter you're looking at there, we've approached it and then fallen off after that. And that's the reason why I'm saying I think $10 is not out of the realm of possibility in the short term in regards to that run. Now, obviously, traders are controlling this sort of thing. What's Wall Street going to do? Nobody freaking knows. Anybody out there guessing is strictly guessing, guys. And I'm simply giving you my guess based upon the past history. That's how it's acted. Now, am I buying based upon that? Am I selling based upon that? Or making any of those other decisions like that? Well, we'll talk about that here in just a second, exactly what I'm doing. But since we're talking about that $10 mark here, let's address the next question, which is, can we get to the $10 mark and stay above it? This is the big question that is weighing on every investor's mind, at least long-term buy and hold investors, is can we finally take that $10 mark and hold it? And guys, in the past, this was very, very, very easy to predict. And the reason why is because they weren't profitable. They were firmly trader controlled, which means they're essentially going to pump it up and then dump it back down and rinse and repeat over and over and over again. And we'll talk about the strategy to take advantage of that here in just a second. But in this particular scenario, we're not necessarily in that easy money type play per se, easy able to predict per se. We're not in that time frame anymore because now they are profitable. Every single quarter they are going from trader controlled to more institutional controlled. It is showing in the numbers that every single month institutional buying is more than the institutional selling is. We've heard that from the bears before. They're all they talk about is the sells, but then when you look at the actual data, institutional ownership went up that month. So who freaking cares? You're seeing that rise quarter in and quarter out, month over month institutional ownership is rising, which means it's taking shares out of those traders' hands and putting them over here in the long-term buy and hold investors' hands over here at the institutional level, who don't react daily to anything and who aren't trying to pump and dump it or anything else like that. They're over here. So we are slowly seeing that transformation go from trader controlled over here to basically institutional ownership control, which just means less volatility and more solid ownership in the stock. And let me be clear about this very next point, guys. You've got to understand it. It will have kind of its Palantir type of moment. Now, I don't think it'll go on a 4x run like Palantir has from it finally, kind of going from trader control to more institutional control. Don't think we have that sort of move. But what I mean by is breaking out of the pattern that we're currently in and staying above that $10 mark. SoFi is going to have that moment. The problem becomes, and this is the problem that we all have, is nobody freaking knows when that's going to happen. Nobody knew when the Palantir one was going to happen because there was plenty of people on YouTube, on CNBC, everywhere else saying, hey, guy, I know it ran up to 12, but it's coming right back down to 7. Don't worry about it. Go ahead and sell, take your profits, come back. And then the next stop was $20 after that, and it hasn't come back down below that mark since. That right there is the type of scenario that trading gets you into. That's why I don't trade. I simply execute on my strategy, and I stay disciplined within my strategy because nobody knows when that next moment's going to happen. Any YouTuber out there telling you that they guarantee this is going to happen, they probably already guessed it 25 times before. And so it's useless to speculate at that stage on that sort of thing. So there's actually 4 ways to profit big from all this. So how do you profit big? So given this scenario, given everything that's happened, although I don't think it'll go on like a Palantir 4X style run, we definitely have a Palantir style run of it being able to maintain and hold over that $10 mark coming. How do you profit massively from that particular move actually coming to fruition? How do you maximize that opportunity that you're going to get at some point in time with SoFi stock? Whether or not it's this quarter, whether or not it's next quarter, whether or not it's next year, it's going to happen for you. How do you profit from that and make the max amount of money possible? So here are the 3 things you have to do in order to be able to execute to that and make that money. The first is do your due diligence. I know that it seems basic, guys. You guys hate that I say it all the time, but if you don't have a valuation, you haven't done your due diligence, you don't know what you own. You don't understand the opportunity that's in front of you. You can't tell the difference between FUD and reality. You can't tell what's a good deal, what's a bad deal. You can't do any of that sort of stuff. And more importantly, because you don't know that, now all of a sudden you're going to lean on a YouTuber's opinion, on CNBC's opinion, maybe on an article's opinion. You're going to lean on all these other resources except for doing your own due diligence to where you know exactly what you own. You know exactly what the opportunity is. And maybe you did your due diligence and you thought, hey, SoFi isn't the right opportunity for me. That's still valuable, guys. That's invaluable because not every stock is right for every person. You can show me any stock in the stock market. Doesn't matter. Pick it. And I can show you a scenario where it makes absolute incredible sense for one investor and it makes no sense for an investor over here to own that stock at all. Zero. No sense at all. Any stock. You pick it. I can do it. So doing your due diligence allows you to understand not only what you own, but more importantly, should you own it or not in the first place. The second way to profit big is to buy the fear, resist FOMO. Look, if there's one thing the stock market hasn't taught us over the past 3 or 4 years, is you absolutely have to resist FOMO and absolutely buy when everything is ending, the world is ending. Stock market, we're going back Great Depression 2.0, all this other ridiculous stuff that has come out over the past couple years. When you actually did your due diligence and you understood the fundamentals of a company, that's how you identified stocks like NVIDIA in the low hundreds. That's how you identified, Meta in the 80s. That's how you identified Tesla at 100. That's how you identified SoFi at 4. For those of you guys that own a bunch of shares like I do in the $4 and $5 range there, to where, hey, it can pull all the way back down to $6. I'm still well in the green on my SoFi shares. And then on the flip side of that, you got to resist FOMO because that's the reason why some folks have owned shares of SoFi at $24 per share. That's called not resisting the FOMO there. Same thing. People own Tesla at 400. People that are basically quote unquote bag holding, even Palantir, despite its great run, we got folks out there who have a $35 average in Palantir. The same exact stuff applies over and over and over again to the stock market. When you do your due diligence, you basically buy the fear, and then you essentially resist FOMO whenever everything's run and everybody's saying buy because things are going all-time highs and they can only go higher and all other sort of stuff like that. Or resisting that FOMO. And more importantly, they kind of work together. Whenever you buy the fear and then your stock goes on an epic run, I feel no reason. SoFi could run to, let's just say $15 tomorrow. I feel no reason to buy more shares because I was busy buying the whole time. I already have a position built out. I already have more shares than I wanted of SoFi because I bought the fear. And when you buy the fear, you can enjoy the FOMO runs and be patient and just be willing to wait because I already have all the shares that I want. If I don't get a chance to buy again, that's okay. I know Wall Street will give me another opportunity because Wall Street's dumb, but nonetheless, I'm still okay regardless. The FOMO does not bother me. It helps me with my FOMO per se to have already bought the fear. What is a critical piece to making a lot of money on a stock that moves like SoFi moves is to be able to buy that fear and resist that FOMO. But number three, and that basically kind of leads me into the third one, and that is focusing on increasing your share count. Here's the reality, guys. We have been given 2 years, where SoFi has basically bounced somewhere in between $4 all the way up to, $10 or so, $12, whatever the heck the top is there. You've had 2 years to build out a position in this stock. And every single earnings call in that 2 years has been a double beat raising guidance. Every single one of them. So the fundamentals have gotten better every single quarter in and quarter out. The only thing that you had to do was increase your share count, guys. A share count is what matters over the long run. I would much rather own 10,000 shares at a $7.50 average as opposed to owning only 1,000 shares at a $5.50 average per se. I would much rather own that 10,000 because if SoFi goes to $15, $18, $20 or more at that stage in the future, you're not going to be sitting back saying, oh, I wish I would have bought more like the guy with 1,000 shares. The guy with 10,000 shares is going to be like, man, I'm sure glad that I bought all that fear all that time. And number four is not timing the tops and the bottoms. That is what gets retail investors in trouble more than anything, is trying to time the tops and the bottoms. Everybody, sure, it'd be great if I would have bought all my, however many shares I want of SoFi at the $4.50 range. It's just not realistic to do that with any sort of consistency or accuracy. You've got to just buy when the fear is high and the valuation makes sense and those shares are getting cheaper. And if they continue to get more cheaper than where you bought it at, you just simply buy heavier at that stage. That is the strategy you have to implement because you cannot time the tops and the bottoms. There are no trillionaire investors out there, which means nobody can do that with any degree of accuracy. Who freaking cares if you're down in the short term for a month or 2 months or 3 months or whatever the case is, if the stock and you see it right here, just in this 2-week run right here, there was a lot of folks who were at an average of $7, we'll say. Obviously, the stock traded all the way down to $6.15 or so if they were averaging all the way down. Now, all of a sudden, it's well over their $7 average. So they went from extremely negative to, wow, a really nice run and really positive in just 2 short weeks. That happens all the time in the stock market. Trying to time when that's going to happen is useless. You have to stop trying to time the tops and the bottoms and trying to time the market, period, and just simply buy when the valuation makes sense. Understand you're going to be down in the short term, but you're going to destroy the market in the long term. That's how you not only end up with stocks that 2x on you, 3x on you, give you a 50% return, whatever the number is that you're looking for there. Not only do you get that, you didn't time anything in order to do that. And because you were worried about share count, sure, some other guy might have timed it better. He might have a better average, but my guess is he doesn't have near the amount of shares that you do, which of course means you make more money over the long run. And if you want to learn in depth on how to do all this step by step, make sure you check out the pinned comment down there for my group where we have 5 free courses you can take that walk you through every single step of this. You have free coaching you can take to help you out with this even more. You can jump on our live Q&As and talk to me anytime you want about any of this sort of stuff. You can see all my buy and sell alerts in real time. You can see my complete watch list with price targets. Use our stock analyzer tool for free. Guys, there's so much involved in the Discord. Make sure you check out the pinned comment and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.